You know, they say the perfect crime isn't the one where nobody sees you. It's the one where everyone sees you, but they have no idea what they're looking at. We're opening a case file today on a different kind of crime, one that wasn't committed in the shadows, but right out in the open, under the blinding light of a government press release. The weapon isn't a gun, it's a spreadsheet. The target isn't a bank vault, it's public trust. And the real perpetrator isn't a person at all, it's the math itself. This is the story of a social engineering glitch, where a tax cut becomes a trap.
So, back in 2016, the Canadian government announced a gift. They called it the middle-class tax cut. And on the surface, it looked like a simple, clean gesture, a little help in an era of quiet financial desperation. But when you dig into the forensic data buried deep in the appendices of the Parliamentary Budget Office reports, well, that tells a very different story. It's the story of a system built with a fatal flaw, a glitch in the code that turns a supposed tax cut into a tax hike for the most vulnerable among us.
So that brings us to the big question. Was it really a cut, or was it a heist? The public was told to watch the magician's right hand, that shiny promise of relief. But for this investigation, we're going to treat that promise as exactly what it was, a distraction. A calculated piece of misdirection designed to keep your eyes busy while the real move was made somewhere else entirely, deep in the gears and levers of the tax code itself.
Okay, so here's the cover story, the part they wanted everyone to see and the part almost everyone saw. The government was going to lower the tax rate on the lowest income bracket from 15% down to 14%. For the average person, this was simple, digestible good news. More money in your pocket. It was the headline on every news channel, the talking point on every panel. And that was the point. It was designed to be understood in a second so you wouldn't spend a single minute thinking about the consequences.
Every heist needs an accomplice. In this case, it wasn't a person. It was a phrase, a single line of legislative text. But to really understand why 40,000 Canadians got caught in this mathematical pincer movement, you have to look at the blood on the ledger. We have to go back to 1917. See, Canada didn't always have an income tax. It was sold to the public as a temporary measure, a patriotic sacrifice to fund the Great War. They called it the Income War Tax Act. They promised it would all vanish when the guns went silent. But the system learned something powerful that year. It learned that once you tap the vein, you never pull the needle out. By the 1940s, temporary had become permanent. And this all matters for the paper heist of today, because every middle-class tax cut in Canadian history has a shadow. This wasn't a random error. It was the climax of a 100-year evolution. For a century, the government built the maze. In 2016, they just moved the walls while everyone was sleeping.
To understand the crime, first you need to understand your defenses. The tax system has these things called non-refundable tax credits. The best way to think of them is as your financial armor. The basic personal amount that everyone gets, the disability amount, the age amount, credits for catastrophic medical expenses. Now let's be crystal clear. These are not loopholes. They are structural shields designed by the government itself to recognize the unavoidable costs of just living, of getting older, of being sick. This armor is the system's one small admission of humanity. And right here, this is the core of the heist. This is the autopsy of the math. The value of your armor, the strength of your shield, it's not a fixed dollar amount. It's a multiplier, hard-coded directly to the lowest tax rate. For decades, that rate was 15%. And this is where the silent accomplice comes in, a little rule called the appropriate percentage. So when the government lowered the tax rate from 15% to 14% to give you that cut, the system automatically and silently devalued every single one of those credits. Your financial armor was thinned by nearly 7% overnight. It's like a general telling his troops he's lightening their load, but he does it by punching holes in their body armor. And this is our first system failure, a tax cut that simultaneously weakens the primary financial defense for the most vulnerable citizens.
And what was the take from this little maneuver? Over 5 years, the government recovers $35.7 billion. This isn't a cost of the program, it's a clawback. It's how they finance the heist. The system gives with one hand, this very public visible rate cut, and then it takes back more than half with the other, through a devaluation of credits so technical, so deeply buried in the code that almost no one would ever notice. The money you thought you were getting was, in part, paid for by you.
So we've seen the mechanism of the crime. Now we move on to its victims. The Parliamentary Budget Officer, the one fiscal watchdog the government can't silence, released the forensic report. It's a case file, really, detailing all the collateral damage. And it reads less like an economic analysis and more like an indictment.
The official count is just under 40,000. 40,000.
40,000 Canadians who, because of a policy explicitly named the middle-class tax cut, will actually pay more tax. These aren't rounding errors. These aren't statistical anomalies. These are people caught in a mathematical trap set by the very system that was meant to support them.
So who are they? Let's build the forensic profile. The PBO report identifies one group with chilling precision: individuals and couples with high non-refundable tax credits, which usually means people with catastrophic medical or disability expenses. These are people whose financial shields are massive because their costs of living are massive. They rely on these credits not to get rich, but just to survive. But because their income is often fixed, they don't get the full benefit of the 1% rate cut. Oh, but they take the full undiluted hit on the value of their life-saving credits. The math is inescapable, and it is brutal.
Let's just isolate this number for a second. For a single person with high medical needs, the average tax increase is $166. Think about the cold cynicism of that math. The system is taking $166 from a senior battling a chronic illness or from a person with a severe disability to help fund a tax break for the healthy. This is the second system failure. It's a policy that functions as a reverse Robin Hood executed by a spreadsheet.
But the heist was sophisticated. It didn't just target the vulnerable. It also set a second trap, this one for high earners. They were chosen as the collateral damage needed to make the numbers work. It was a second, silent raid to balance the books of the first.
See, inside the tax code, there's a secondary security system, a parallel calculation called the Alternative Minimum Tax, or AMT. It's a flat-rate trap, set at 20.5%, designed to make sure the wealthy can't use a million loopholes to pay zero tax. It's the system's fail-safe, a backstop. And in this heist, it became a weapon.
And here is the glitch. The Canadians caught in the AMT trap, they do not get the benefit of the new 14% rate. They are locked in at the much higher 20.5% rate. But, and this is the masterstroke of the design, their non-refundable credits are still devalued by that appropriate percentage change. They get all of the pain and none of the gain. The system charges them for a service they never receive. It's not a tax cut, it's a stealth surcharge.
So this is the final tally. The evidence in one stark visual. A high-income couple with two earners gets the maximum benefit, a $750 tax break. A low-income senior gets a paltry $50, most of which is eaten by the devaluation of their age credits. And the individual with high medical needs, they lose $166. This is the ultimate system failure. And this wasn't a mistake. This is the system functioning exactly as it was designed.
This tax change wasn't an accident. It was a blueprint. It was a test to see if a policy could be sold on a simple, appealing headline, while the complex, damaging truth remained buried in the fine print. They're betting that you're too busy or too bored to do the math. And now that the blueprint has been field-tested and proven successful, they have a next target in mind.
This was a story about devaluing credits by a single percentage point, a stealth tax on the sick and a surcharge on high earners. But what happens when they apply this same principle, a simple change with complex, hidden consequences, to the single largest asset most Canadians own? What happens when they come for your home equity, not by a glitch in the code, but by deliberate design? That's the next case file, and the target is you.